Back with the market right here on ET Now. Let's talk about the market, which is definitely weakening even further. Arun Thukral joins in with his sense on where stocks are headed. Arun, hi, good morning. As we step into expiry, only closer to election outcome, I guess market is feeling the jitters. Do you also believe upside from what we saw last week is going to be a little bit capped until this big overhang of election outcome is done away with?
Good morning, Aisha. So I think today we are seeing the weakness primarily on the back of this crude concerns. And I agree with you somewhat that I think more or less this pre-election rally is getting capped because of the concerns. Because last 2 months have been very good because of the basically the monetary easing by the two central banks of the developed economies. Because of US-China trade war right now on the back burner, and being no news is a positive news. And also the Brexit is postponed till October 31st. And the rally has taken place in the last 2 months. And now this crude concern, I think that is worrying. And if this US announce about the Iran or Iranian sanction, that may be some announcement we are expecting today. So then the profit booking will start, and then we will have the jitters of the pre-election whatever we face every time. So more or less it is done, but market is actually factoring in the current regime, and if we move closer to 23rd May and if it is as expected, then the rally will again resume. So maybe next one month is going to be now very volatile.
Have you been tracking earnings, Arun? Reliance this morning, HDFC Bank, some of the big ones that we've been looking at. How are you expecting earnings growth to be this quarter? Are you focusing on particular segments? What did you make of Reliance, or what are you anticipating from the banking majors?
So I think Reliance and HDFC both have delivered good results, and if you look at obviously the GRM has not come as per the expectation, but the retail portion has done well, and the revenue we have seen over 1 lakh crore. And HDFC again, as expected, they have delivered the number. But what we are now hoping that even the FMCG pack, which were delivering great numbers for the last 5 quarters of double-digit volume growth, that should continue. And if the monsoon is also normal, which IMD is saying is that is near normal, however the SkyMet is talking about 93%. If the third year monsoon also is normal now, so then we obviously expect the FMCG, the consumer segment do well in the coming month. And on the back of whatever interim budget has said, even the urban consumption will pick up, the MSPs will be obviously higher. and the rural infrastructures have improved, whether it is electrification of villages, and on the urban side also there are a lot of positives about this interim budget talking about higher tax limits. So all this will augur well for the consumption sector. So that is our the segment pick, if you ask me, if there is only one segment. And otherwise then yes, we are obviously bullish on the banks also, private banks with retail focus as well as corporate focus. Retail focus obviously all the while, and now because the corporate focus bank also have reporting good profitability in the last quarter, that should continue, and because more or less the provisions are there now. So I think this is our second pick. And going ahead, obviously we are bullish on IT and Pharma, although there were some rupee appreciation worries, which is last 1 month, I think it has appreciated by 2%. Now I think that should stabilize at this level. So these are some of the sectors where we are very positive.
Okay. Fair enough. Let's take a look at some of the other pockets, that you're anticipating some amount of potential in. And you're looking at Pharma, which is interesting because, last week we had Rakesh Jhunjhunwala talking about Pharma and an increased focus there as well. Talk to us about why this sector is looking like, good to you, or that like it has potential at this point.
Yeah, so Pharma also we are saying it is good because over a period we have seen that the price erosion which was happening, that has now somewhat settled in single digits. And the Indian companies are getting into this specialty products or complex product, and maybe over a period of time there may be some price rise happening. So maybe, and the results have been good for the last quarter. So net, and it has seen the tailwinds of rupee depreciation in the last 3-4 months. Although as of now that tailwind is not there. But net, we are positive on pharma, but in that order. So consumption, then private banks with retail and corporate focus, then IT, and then pharma.
Yeah. Arun, now that we've begun the earnings season, it's really been not all that bad. At best, up until now, as selective as the sectors which have reported numbers have been, is looking largely in line. But where do you think is going to be the concentration of positive surprises? And would it be restricted to the financials, or do you think even cement, which is going to deliver its numbers, a few of them coming out this week itself with Ultratech and ACC slated to come out with their numbers, do you think cement also has a high chance wherein there could be a material uptick in both margins as well as realizations?
So cement, because this is the summer season, so maybe this quarter generally cement results are better, and we are expecting better results this quarter. But net over a period of time, what we have seen is that there is going to be more supply, and till the next 2 years there are going to be more supply. So maybe we are bullish on some south-based cement companies, but net we are as of now neutral on cement, although we are expecting good results this time.
All right, so that's the take on cement. Okay, autos as well. You're not necessarily expecting much from earnings, but given the fact that we're entering election season, the fact that we're seeing some amount of interest in rate sensitives at this point, would you be looking at any specific pockets within the auto pack?
So as of now, let the election be over and let the monsoon, whatever IMD is saying, if it is normal, these are going to be two positive triggers, because as of now the numbers are not encouraging, and the interest rate remission has not taken place. After the election, maybe we are expecting one more rate cut sometime in August. So if all that happens and this interim budget get passed, and there are some more positive development happening, so I think, and as of now the crude is again a worry, which is not going to help the auto sector again. So as of now we are neutral and we'll wait and watch.
Okay, Arun, great to have you on the show. Thanks much for taking the time out and speaking with us.